TSMC beat earnings on Friday and still sold off 3% because it dared to spend more on AI. Tomorrow, Alphabet and Tesla face the same jury. Let's get into it. Alphabet and Tesla report Q2 after tomorrow's close, in what strategists call the first true stress test of AI capital spending at scale. Alphabet consensus sits near 117 to 120 billion in revenue, with Google Cloud growth around plus 63% as the swing factor. Tesla's options are pricing a 7.6% move after it lifted 2026 capex from 20 billion to over 25. Here's why it matters. TSMC just showed the regime shift. It beat on profit and revenue Friday, then dropped over 3% because it paired the beat with higher capex. The market has flipped from rewarding AI spend to punishing it. The bear case is already flashing. In Q1, Alphabet's free cash flow fell 47% year over year, even as capex jumped 107% to 35.7 billion. Investors want the return, not just the spend. If cloud clears 63% and margins hold, the spend story survives. If cloud disappoints on record capex, expect the TSMC treatment. Monday was a nervous, indecisive session. The semiconductor index ripped up 2.1% at midday on bargain hunting after last week's rout, then gave out to almost all of it back by the close. Renewed U.S.-Iran military exchanges over the weekend pushed crude to touch $90 a barrel, and Apple fell 2%, the single biggest drag on the Dow. The S&P closed down nearly 0.2 at 700. The Nasdaq barely budged, and the Dow shed 307 points. Why it matters. This is the market telling you the AI trade is now headline hostage to geopolitics and to whether hyperscaler capex can justify itself. There was no conviction bid after last week's 2.9% Nasdaq decline. The bear case. With oil at 90 and traders unwilling to position before the earnings deluge, any capex miss tomorrow lands on an already jittery, thin tape. Watch crude, sustained above 90 pressures margins everywhere. Cool it, and this coil resolves higher. Intel closes out the week's earnings gauntlet Thursday, and it arrives up a staggering 163% year-to-date on foundry optimism. Recent Apple and Microsoft commitments to its 18A process, with 18AP entering risk production. The street model's EPS around 21 cents on 14.4 billion in revenue, with options pricing a 12 to 15% swing. Why it matters. The bull case hinges on those 18A external customers validating Intel as a genuine TSMC alternative, the same TSMC the market just punished for spending. Intel's whole foundry pitch is to take that share. The bear case. The specific probabilities floating around are Tier 2 sourcing, market implied not confirmed, and 163% run prices in a lot before foundry losses have actually stopped bleeding. Watch two lines. Thursday, foundry losses narrowing and data center and AI clearing 5 billion. Prediction markets put roughly 75% odds on that second one. Clear both, and the comeback has legs. The White House is finalizing a voluntary framework that would give federal agencies up to 30 days to review a new frontier model's national security implications before public release, with an announcement expected before August 1st. It covers 3 pillars: benchmarks, testing timelines, and access rules. Why it matters. CNBC framed it bluntly. Washington is increasingly dictating access to frontier AI, shifting leverage away from the labs. That's the very companies, Anthropic, OpenAI, and Google, whose valuation narratives assume an unfettered launch cadence. The bear case. The executive order bars mandatory licensing, but enforcement leans on informal levers. Export control threats, delayed approvals, cabinet calls. A 30-day review is a real drag on release tempo. This lands directly on Anthropic's October IPO clock. If the trigger threshold is set low, every frontier launch slows. And that's a discount the market will start pricing into ANTH before it ever rings the bell. Gemini 3.5 Pro remains unshipped as of today, blowing through its July 17th target, the third consecutive slip since Sundar Pichai's May promise of "give us until next month." Reporting points to scrapped architecture, recursive tool calling, and SVG failures, and benchmark shortfalls versus GPT 5.6. Why it matters. Google is now said to be weighing a stopgap release, and every extra week is competitive ground ceded to OpenAI and Anthropic, while a CapEx-punishing market watches Google guide to $180 billion in spend and still miss ship dates. The bear case is a caveat. All of these specifics remain third-party sourcing, not official Google confirmation, so treat the details cautiously. But the pattern of slips is itself the signal. The forward read comes tomorrow. If Pichai addresses Gemini timing directly on the earnings call, that's the tell. Continued silence on a fourth slip is the bear case for Google's AI leadership. The through line is simple. The market has stopped paying for AI ambition and started demanding the return. Tomorrow's Alphabet and Tesla prints are the first verdict. Subscribe to the Daily Alpha so you're ready before the open. This has been the Daily Alpha.